Hi everybody, I'm Jamie Trull. I'm a CPA and financial literacy coach, and today we're going to be talking about estimated taxes. And we're going to do a walkthrough of the IRS system for how to actually pay estimated taxes. And we're going to go screen by screen so that you can make sure you know what you are doing. Now, first, before we get into that though, we're going to talk a little bit about who needs to pay estimated taxes. And the answer to that question is anybody who is self-employed. Maybe you are a freelancer, maybe you are a small business owner, especially if you're making a profit within your business, right? Then you are likely going to need to pay estimated taxes. Now, you don't necessarily have to pay estimated taxes. Some people decide that they are just going to save for taxes and pay it all at once. Now, you could be subject to some interest and some penalties if you do that. So I don't necessarily recommend it. I think, especially when you're talking about your second year of profit and ongoing, it probably makes sense to be paying in towards estimated taxes. So again, this is going to go towards sole proprietors. That includes my freelancers and also small business owners. Maybe you're an LLC, something like that, and you take owner draws out of your company and you have a profit, right? That is when you are going to need to pay estimated taxes. Because remember, right, unlike with a regular job where you're getting a W-2 paycheck, the profit in your business, you aren't having taxes withheld on. Okay, so even if you are, let's say, an S Corp or a C Corp, and you do take a salary, it's only withholding taxes on that portion. So if you make a profit above and beyond your own salary in your business and are also taking owner draws, even if you're a corporation, you probably should be doing estimated taxes. If that's you, if you've realized, yes, I'm here because I know I need to make some estimated tax payments, then this video walkthrough is for you. So let's jump on over to the IRS website where we're going to start walking through screen by screen how to actually pay your estimated taxes.
Okay, so we're going to start out here in the portal for the IRS at irs.gov/payments. That is where you're going to go to make a payment. And you'll notice that up here it says see what you owe and pay by bank account. If you have not yet set up an account, you won't be able to do this. You'll have to set up a brand new account. And this is not going to tell you what you owe in estimated taxes. What they mean by what you owe is really if you owe back taxes or anything like that, you can see that in your account. You can also see what estimated taxes you have paid. So if you don't remember what estimated taxes you paid maybe back in Q1 of the year, you can always go and sign up for an account. You will have to do some ID verification, including uploading your driver's license. So it's not the quickest thing to do, but it can be really helpful to sign up for that. But today we're gonna look at how to pay estimated taxes today. So you're gonna come down here and you're gonna decide whether you wanna pay by bank account or by debit card, credit card, or digital wallet. I recommend paying by bank account. It is going to be the cheapest way to go. I definitely do not recommend paying by credit card. You can see that there are some pretty hefty fees when you are paying by credit card, especially if you have large amounts that you owe in estimated taxes. I don't recommend going that way. I actually like to pay them directly from my bank account. So we're going to go back to that page and we're going to hit Pay Now by Bank Account. And then you're going to read all of this and then you're going to hit Make a Payment. Now you're in the IRS Direct Pay portal and you're going to select your reason. So in this case, your reason is going to be estimated tax. And you're going to apply the payment to, and it's going to be your 1040 ES or 1040. Basically, this is your individual tax return. And your tax period for the payment, you're going to select what year you're making that estimated tax payment for. Sometimes this will only show 1 year, it may show 2. And then it will tell you that it wants you to confirm. You can read through that, make sure everything's correct, and plus continue. Now it's going to be looking to verify identity. So it's going to ask for the tax year for verification. Usually, as long as you filed taxes in the previous year, you're going to pick the most recent year. And all you have to do is go pull up your previous tax return, which hopefully you have saved somewhere accessible, and it's going to easily verify your identity. Then you're going to go in and look at your filing status. Depending on whether you're single, married, filing jointly, etc. You're going to put in your name, your social security number, date of birth, street address, etc. I typically recommend using, in this case, you're probably going to be using your social security number, not necessarily your EIN. Just note that that's completely fine. Remember that you're paying estimated taxes from a personal perspective. So even though you might be a business owner, you might have a sole proprietor, LLC, or even an S Corp, you are technically paying your taxes from you personally. All of those entities are considered to be pass-through entities, which means you pay taxes at the individual level. So you're probably going to put in your social security number here. Now, if you have any trouble with this, it may be because you're not the primary taxpayer. So you want to know who the primary taxpayer is. You can look at your tax return from previous years to determine that, but typically you're going to pay your estimated taxes under your primary taxpayer's information. And that can be a little bit confusing, especially when maybe our primary taxpayer is our spouse and they don't have ownership in our business. We wonder why in the world we're paying it under our spouse. But if you are married filing jointly, that may be what you need to do. So pay attention to who that primary taxpayer is. And remember, you're paying this from an individual perspective, not from a business perspective. Okay, so I put in all of my personal information and I logged in, and now it's going to be asking for your payment amount. So it's going to ask you for your payment amount. To confirm your payment amount, it's going to ask you for that payment date that you want to make, right? Depending on when you are making the payment. You probably want to make it as soon as possible unless you're scheduling it for a later time. Your routing number, your account number, confirming your account number and what type of account it is, and then you're gonna sign with your email address. Now, one thing to keep in mind, a lot of questions that I get from business owners is, should this be coming from my business banking account or should this be coming from my personal banking account? So like we said, remember that these are pass-through entities, so your taxes are technically assessed not at a business level, but at a personal level. So because of that, it really is best practice to pay these from your personal account. So what I will do when it comes time to pay my taxes, I will typically initiate a transfer out of my business account as a draw to myself, as an owner draw. And that is the money that I will then use to pay my taxes. So they will be paid from my personal account, even though most of the money is coming from my business. So now the next step is just to do your electronic signature. You're going to put your first and last name and your social one last time and accept the debit authorization agreement and click submit. Then you should get to the point where you have a confirmation number. You want to keep that confirmation number. I actually recommend going ahead and pressing print and then saving this as a PDF somewhere where you are saving other important tax documents for that year. That's going to be really helpful when you inevitably forget exactly how much you've paid in estimated taxes. You will have a record of that because you will need to know that when you fill out your tax return at the end of the year or when you give your information over to your tax preparer.
So hopefully you found that tutorial super helpful. Obviously, when it comes to the amount that you want to be paying for estimated taxes, you're probably going to want to consult with an accountant, or you can basically look back at what your tax liability was last year and divide by 4. Now, in that case, if you take that route, you're likely not going to have penalties if you are under, right? But if you make significantly more this year, then you might want to up your estimated taxes a little bit from what they were last year so that you don't get into a situation where you have a huge tax bill to write in April, because nobody wants to do that. So hopefully you found this useful. If you have more questions about getting ready for taxes, perhaps you're trying to get everything together to actually file your taxes and you feel like everything is all over the place, then I want to tell you about a promo we have going on right now. It's my Ultimate Getting Ready for Taxes bundle. We've got lots of checklists and templates and extra video lessons and guides to increasing your deductions. We've got all the things that you need. We have a special YouTube promo going on right now, although depending on when you're watching this video, that is subject to change. So go check it out. See if we're still running the promo, jamietrull.com/tax time. And we've got all kinds of things that will help you get ready for taxes, save the most amount of money on your deductions, and get all your financials together quickly. So go check that out, and I will see you next time.